Ladies and gentlemen, as we end 2023 and head into 2024, Bitcoin is seeing exhaustion, right? Painted throughout all the charts. Look at any chart, look at any time frame, exhaustion is showing. But the fact of the matter is, the ETF narrative has stuffed up the TA a little bit. The ETF narrative has allowed Bitcoin to stay afloat for a much longer than it should have from traditional charting metrics. Now, will that continue? That is the question. And to decide whether it will continue or not, we are looking at three distinctive charts, and I encourage you to look at these three charts in determining whether Bitcoin will see a big correction next or a continued move to the upside and 48K next. It's a big question. As we end 2023, we need to get to the answer because a lot of these things we need to look at are reliant on the yearly candle close. Ladies and gentlemen, let's look into it. Ladies and gentlemen, I want to take this video here today to be incredibly clear about what we need to be looking at for Bitcoin. We have three major things we need to be watching for Bitcoin. Okay, we'll start out with number one and we'll head all the way through to number three. Then we've got a couple more charts to look at at the end that are relevant for context. Guys, before we even get into number one though, we need to understand what Bitcoin has been doing. We need to understand the absolutely undeniably unstoppableness of this move to the upside we've seen over the last 200 or so days on Bitcoin. I did a community post yesterday and I did a video yesterday. As you can see, the video was literally called "This Hasn't Happened Since 2011." We have a situation here where Bitcoin has not seen this long, which is 232 days, without a 25% correction since 2011. We have been 25% correction free for the longest period of time since 2011. So that just really goes to show here how strong Bitcoin has been, how many people are just not willing to sell. And why is that the case? ETFs is why. People are not willing to sell before that ETF decision. They're staying in the market until the ETF decision. They're not selling into corrections, and so the corrections are not progressing further than they should be. And that has led to massive inconsistencies in what the TA expects, what the TA predicts, and what's actually occurred. So I know for myself, and I know many analysts personally who are very much excited for this, ETF stuff to be over on January 10th, not because they want the ETF or don't want the ETF, but because they're sick of the charts being ignored in favor of kind of this underlying narrative just forming the Bitcoin structure. The fact of the matter is, Bitcoin has been in a vicious upwards trend for a long period of time with no significant corrections whatsoever. And this upwards trend begun back here in September, but realistically, the overall upwards trend actually begun way back here in November. We've been in a massive upwards trend on Bitcoin for, in excess of a year now, for 13 months. And you might think, how's that possible? Well, the reality is, what is an upwards trend? An upwards trend is when you have higher lows, and we had equal lows here, so it still counts, and consistent higher highs. And that's exactly what we've seen throughout the entirety of the last 13 months. This upwards trend has been undefeatable. And a lot of that's due to the ETF narrative, but we'll discuss ETFs more towards the end of the video. The fact of the matter is we have this brutal upwards trend, but the recent leg upwards, right? Because obviously this upwards trend has technically been going on for 13 months, but I mean, if you're being more specific, you're taking a more nuanced approach, you could actually say that this upwards trend, or at least this leg to the upwards trend, only started here in September, on September 11th. And so we've started that upwards trend in September. That's been about 3.5 months ago. And we've been viciously just moving to the upside ever since then. Now, what has been our foundational support for this upwards trend? Well, you can make the very clear argument that the Ichimoku Cloud baseline that we have on the screen here is that supporting level, right? We tested for support first here in October. Ever since then, on every single retest, we've been holding it. So we've had 1, 2, 3, 4, and we came in for our 5th retest yesterday, all of which held for support. So we can very clearly say, back to the video title and back to what I said in the introduction, the first thing we need to be watching on Bitcoin, and this looks into a medium and short-term perspective, in order to see whether that upwards trend is going to be flipped back downwards, right? In order to see whether we're going to actually see a correction, is this Ichimoku Cloud baseline, right? We need to be watching that Ichimoku Cloud baseline. If Bitcoin gets a daily candle close below that level, that's going to be very, very bad. Now, coincidentally, or not so coincidentally, the Ichimoku Cloud baseline lines up pretty well with 42K, right? This is where we get into the second thing we need to be watching. What is 42K? 42K is where the Ichimoku Cloud baseline is on the monthly chart. Now, on the monthly chart, the Ichimoku Cloud baseline has been one of the most important indicators you could possibly look at on a cyclical level, or on a macro level, I should say. Whenever we're above this thing, we go into vicious upwards trends. Whenever we're below it, we go into vicious downwards trends. You can identify those as bull markets and bear markets. This has happened over and over again. throughout the entirety of Bitcoin's existence, throughout the entirety of the period of time when this line has even been relevant, which goes all the way back, right? All the way back to something like 2012, since it was first even present on the screen. The Ichimoku Cloud baseline, not only is it important on the daily chart right now, and that's the first thing we need to be watching, but it's also important on the monthly chart right now. And it's important in both regards because the daily chart Ichimoku Cloud baseline lines up to the same price point that the monthly chart Ichimoku Cloud baseline is currently in. And this just exemplifies the importance, right? What we have is a situation here where Bitcoin has a monthly candle close in just 4 to 5 days, right? Let's just say 5 days because it's 4 days and 19 hours. And if we do close the candle above this Ichimoku Cloud baseline, we will, as per the historical trends, continue into a bull market most likely, okay? Now, the ETF complicates that slightly. There's a little bit of nuance there. I've discussed it to the point in which my tongue is so tired of uttering the words that it's just brainlessly tiring. I'm over discussing it. But the fact of the matter is, if we do close this monthly candle close above this Ichimoku Cloud baseline at 42K, 42.2K to be precise, that's going to be a very, very good sign from the macro scale on a simplistic level. Again, there are nuances, but we'll discuss them more when we get closer to it so we don't repeat ourselves over and over again. But the brutal reality as well is, if we close this monthly candle close below 42K, below the Ichimoku Cloud baseline, that would be not only a drop below this daily chart level and a start to a downwards trend, a start to an actual reversal with a double top formation, but also a rejection in similar fashion to what we saw in 2019 from the monthly chart Ichimoku Cloud baseline, which will lead to a longer term, a medium to long term macro correction downwards before only starting the bull market and breaking that level after the halving. So, that's the second thing we need to be watching, and of course they're interlinked. And the third thing we need to be watching is this yearly candle close itself, okay? Obviously coming into the end of 2023, we're seeing the end of the yearly candle. We do have preliminary patterns forming in how these candles are structured because of the fact that we have the 4-year cycle theory. The 4-year cycle theory, of course, being a cycle triggered by the halving that leads to bull markets lasting 1 year, bear markets lasting 1 year, and the remaining 2 years of that 4-year cycle being used up by accumulation. And so we have this kind of trend illustrated here on the yearly chart, and the yellow line, the white vertical lines of the screen here represent the halvings, and you can see right now that there is a trend here, there is a pattern forming. We see the halving, okay, the halving triggers a green candle. We then see the bull market the year after the halving on candle number 2. On candle number 3, we see the bear market. On candle number 4, we see the kind of accumulation period. On candle number 4, again, on the halving candle is resetting the halving. That's when we see the cycle kind of reset. So let me explain that again because I did it quite poorly there. Essentially, the halving, okay, triggers the bull market. You can see that the halving candle on every occasion is kind of this smaller green candle, but the candle immediately preceding it on these 2 occasions here are triggering bull market candles. The year after that, not in 2021, there was nuances there in 2021, but the year after that, we see the bear market. And you can see after every single bull market candle, you see these red candles here that's distinguished the bear market. The candle following that are the candle we're interested in right now, right? That's the 3rd candle of the cycle, essentially, or the 4th candle of the cycle. And essentially, that's the candle we're in right now. So what you can see historically is that this candle has been pretty small in relation to the prior bear market candle, right? And it hasn't closed above it. In fact, it's closed somewhere around halfway up. It's only been on the next candle, which is the halving year candle, which we're seeing next year in 2024, that we've been able to skyrocket above new all-time highs. And right now we're in a situation in which we're threatening for the first time in Bitcoin's history, okay, to close above the previous bear market candle open. And that would be a close above 46K. So I would really like to see Bitcoin closing this yearly candle below 46K so that we can form an actual trend here. And that trend would be Bitcoin sees the candle after the bear market being a candle body that does not encompass the bear market candle. That would be a great trend that we could form. That would do a lot to give us clarity on the cyclical theory for the next cycle. That's something we need to watch as well. So ideally, we do not close this candle above 46K. That's something we should be doing in 2024 in the next year, right? So we want to be seeing this candle close remain low. Actually, preferably, and I know this sounds ridiculous because a lot of people just get into the mindset that only Bitcoin going up forever is a good thing. The fact of the matter is Bitcoin going downwards is actually a very good thing as well. It's very healthy. And I do think we are in need of a correction on a cyclical level. Okay, I think that cyclically it would be great if Bitcoin saw a correction. I think we need that pullback to bring us back to what we're meant to be doing at this part of the cycle. As you can see, even on the yearly chart, Bitcoin has extended quite high relative to what its bear market candle was. And in the previous occasions, we just simply didn't do that. We went halfway up, and this time we've gone pretty much the whole way upwards. Halfway up would have been something like 32K. We've gone upwards to 42K. We're a little bit too high, I think, on Bitcoin, and that's reflected quite well in a chart I'm going to show you right now. This chart here shows Bitcoin this cycle painted against the previous cycles, and you can see that we are deviating a little bit higher than where we were meant to be, or where we're meant to be, the mean, I guess, from where we're meant to be in the baseline of the previous cycles. We could use a pullback back to get to that, that prior trend, and we could get back on track here. I think if we keep going upwards too high, we could see too high of a deviation from what we've seen historically, and that won't be good for Bitcoin. Remember, people make money by predictability. Predictability makes profitability. Profitability comes from predictability. It doesn't come from volatility. It certainly doesn't come from direction. Okay, if Bitcoin goes to 100K tomorrow, that would not make people as much money as you think it would, because no one would sell. The fact of the matter is, the most profitable thing Bitcoin can do, and the easiest way we can make money on Bitcoin, is if it follows the 4-year cycle. If it stays on track with what it's meant to be doing on a cyclical level. And Bitcoin right now on a cyclical level would benefit massively from a pullback. It would. We are deviating a little bit too high here. It would benefit massively from a pullback. And we want to be seeing, as I said, just to recap the 3 things we need to be watching right now. We want to be watching that yearly candle close. We want to be seeing that yearly candle close below 46K. All right, that's 1. Number 2 is we want to be seeing an Ichimoku cloud. Well, we're watching, I should say, the Ichimoku cloud baseline. Okay, and if we close above that level at 42K, that would be very good for Bitcoin in price terms. Very bad cyclically though. And if we close below it, that would be very bad for Bitcoin in price terms, but very good cyclically. And that's the same logic going on in the daily chart, Ichimoku cloud baseline. If we get a daily candle close below this Ichimoku cloud baseline in the daily chart, we will enter a downwards trend. And as long as we're above it, we are holding that upwards trend. Now, as I went through very methodically in yesterday's video, I think there is a massive amount of evidence from a charting perspective that Bitcoin is utterly exhausted on this move. To be honest, every single indicator you can look at that I've looked at, RSI, volume, MACD, stochastic RSI, generalized analysis in relation to historical analysis and how long Bitcoin generally sees upwards trends for, how long we see them undisturbed for. Just looking back to this community post we looked at the start of the video, the fact that we haven't seen a 25% plus drawdown in 232 days, which is the longest period of time since 2011. There's so many reasons to believe Bitcoin is utterly exhausted here. But the thing that just keeps Bitcoin grinding to the upside regardless of all the circumstances is the ETFs, right? The ETFs, I don't want to discuss them for too long. I've really gone into them quite a lot in the past. They've been an absolute plague to the TA, and this is why you will notice in this video I'm stepping away from making any concrete predictions. I don't want to make predictions because I understand how ridiculous the TA has been made to become because of these ETFs. If TA works, here's my prediction. If TA works, we should go down. If TA works, right, at this period of the market cycle, with the current narratives we're seeing with ETFs, if TA decides to work, we will go downwards and we will see a multi-month correction. We will close below 42K. That is what should happen, and that is what we want to see. But I'm also understanding that the fact that we've seen the longest period of time since 2011, 12 years ago, when Bitcoin was an infant coin, okay, without a 25% drawdown, is a direct result of this ETF narrative. It's a direct result of people being so scared to sell their bags right now because they don't want to miss out on a supposed pump that's not even guaranteed, all right? They just will not sell. And so it's very difficult to sit here and say, oh, we're going to go down when we know this narrative has consumed all Bitcoin TA structures for basically the entirety of 2023, specifically since something like June or July. All right, it's very difficult to make any concrete predictions right now, and I will not make them for that reason. Because I don't believe they're easy to make. But what I will say is this. As I said, the TA certainly says Bitcoin's exhausted. The TA certainly says Bitcoin should go down, and take that for what you will. But I will not be making any definitive buy or sells until this ETF stuff is over. I'll tell you that right now. I don't care if we close above 42K in this monthly candle close. I will not be making a buy on Bitcoin until we get that ETF decision finalized on January 10th. I'll be happy to wait the 10 days. And if we close below 42K, I won't be selling anyway, and I wouldn't sell anyway because I've got a long-term Bitcoin bag. But I certainly wouldn't be selling because this ETF decision is coming up very, very shortly. I believe the fact that this ETF decision, the fact that the ETF narratives have so clearly defined and shaped the Bitcoin charts in such an abnormal way for such a long period of time makes it quite hard for us to sit here and trust TA to its full extent at this moment in time as we reach closer and closer and closer towards the deadline, right? And I've noticed that the TAs become more and more and more incoherent as we approach that deadline. You know, I mean, realistically, and look, I predicted a break of 38.5k, so I'm not going to sit here and say I didn't do that. We were very much correct when we broke 38.5k. We were very much correct when we broke 32k. These are both things I predicted, but we should have rejected at 38.5k. If the TA was true, we should have rejected from that level. And I'll tell you right now, if the TA is true, we should certainly see a drawdown to something like 38.5k or even as deep as 32k from this price region. We should not go much higher at all. That's if the TA works. So we'll have to see. We'll have to see how much of effect this ETF narrative will have, but I can tell you right now, the more effect this ETF narrative has, the more damage is being done to the cyclical theory and the cyclical structures, and the worse that is for Bitcoin on a cyclical level. But overall, I don't want to spend too much time discussing that. There are two things I want to look at quickly. One of which is supporting a correction. We do have trends on Bitcoin, looking at previous parts in Bitcoin's history. For example, 2011, when we see a leg upwards that, and we reject from this yellow line here, a yellow horizontal flat resistance for 200 days. After 200 days, we see another red leg upwards, and then we go upwards from there after 200 days of consolidation. We've seen that time and time again here. Okay, this has happened on two separate occasions here. We're following the same structure. I'm just brushing over this because I don't think it's necessarily that important today. Perhaps it will be in a few days when we get closer to close. If we are going to follow what we've done historically in 2012 and 2016, we will be seeing around 200 days of consolidation right now, bringing us to around May, and then from May we should be going upwards. And this consolidation could range from 32k to the current price region. We probably will be going down and testing 32k. If we're going to follow this trend, or at least 38.5, and then going upwards and around May. That makes sense not only from a pattern perspective for what we've seen in the last two occasions, but also from a cyclical perspective. That's evidence supporting, or I guess a fractal really, supporting a correction, and a healthy correction at that. And then we also have Ethereum here deciding to do the opposite, which is Ethereum breaking above this red line on the screen here, which is around 2130, and that's a very major dividing line for Bitcoin, for Ethereum, that divides the bear market from the bull market region. We've gotten above that line. We're testing it for support right now, and if realistically, as long as we're above that line, we're in a good scenario. So that kind of argues the opposite. We've got two conflicting pieces of data here. I think the first one is very much stronger. As I said, I've been very, very clear. I think the TA very clearly suggests Bitcoin should be seeing a pretty major medium-term correction. And yeah, I think I've been very clear about that. But, as I said, it's not necessarily up to the TA at this point. It's been very obvious in this community post. I outlined it very clearly. The TA is not the driving force for Bitcoin's price movements right now. It's the macro factors and the fundamental factors, I should say, the ETF decision, really. The problem is the ETF decision is not very predictable either. That's the problem, right? The ETF decision is not predictable. We know that the ETFs are very likely to be approved. We know that's the most likely scenario. But we don't know what that's going to do to the Bitcoin price. We actually do not. We know long-term it's going to be good. Okay, long-term it's going to facilitate buying. But the ETFs won't be released as soon as they're approved. And we do know that everyone who cares about the ETFs, everyone who could possibly care about the ETFs at this point, has probably already bought Bitcoin. Are there any buyers left? That's the question you've got to ask. When this thing is approved, are there any buyers left? So we don't know what this ETF decision is going to do. And that's exactly why I'm waiting till January 10th before making any decisions on buying or selling. That's me personally. Guys, long video today. I wanted to discuss those three things. I still think they're very relevant. Daily chart Ichimoku Cloud baseline, monthly chart Ichimoku Cloud baseline, and the candle close that surrounds it, and the yearly candle close. Thank you for watching. I hope you enjoyed. Guys, everyone who trades cryptocurrency needs an exchange. Bingx and Bitget are handpicked by myself. I reached out to them for partnership. They did not reach out to me. That gives you an idea of the authenticity of my promoting them. Bingx is global non-KYC. You can access it from anywhere in the world with a VPN. And Bitget is global KYC minus the USA. So take your pick, deciding on whether depending on whether you want KYC or whether you fit the geographical requirements for joining either of these exchanges. Again, Bingx is global non-KYC. Bitget is global minus USA. Very low trading fees on both exchanges. Never been hacked before, either of them. And my referral link down below will give you access to a 15% trading fee discount for life on both exchanges. Save money, use my referral link, get on good exchanges. There you go, they're right there on the screen. Take your pick. We then have the VIP group. We're running a VIP end of year sale right now. So our prices are discounted up to 75 USD, which is very good. Very good prices to begin with, especially when considering our win rate is 80.5%. We've got a PDF of all of our trading results there, fully transparent. Check it all out using that link below. Again, the VIP sale ends in just a few days, so check it out now. You're running out of time. We've also got Crypto Academy Become a Trader course. If you want to learn how to trade, this is the place you can do it. This course will teach you everything you need to know about trading, from charting perspectives to market psychology to finding trades to risk management. Everything is there. Check out the website. The email address is there for contact details. Thank you for watching, guys. Hope you enjoyed, and I'll catch you tomorrow. Cheers.